Debt has expanded on all levels, personal, city, state, and national. Every day the burden gets larger and larger with no end in sight. Now it's coming back around to bite them. Hang on tight. You came here for the truth, so let me unveil that for you. Today we're going to look at the debt burden in the US. Let's begin. This is the top 10 states with the most debt. We've included the total debt, load, and assets and ordered the list according to the debt to asset ratio. Congratulations, New Jersey. You won 314%. Illinois is also there, above 300%, and the list goes on. The debt burden is not just for these 10 states. It's for all of them. Different degrees, of course. This is showing you the debt to asset ratio, which of course is very important because you can potentially take on more debt if you have more assets. But in these cases, it looks very grim. This list speaks volume about the real fiscal situation in the United States. The federal government can control the currency and print new money if it needs to, but state governments are in a totally different situation. We have 4 states with a debt to asset ratio above 200% and 29 over the 50% mark. Even if you live in a fiscally responsible state, a default by any one of these state houses would send shockwaves throughout the economy, something I talk about all the time. Now just for a moment, think about the Federal Reserve and what it's supposed to do. It's supposed to print money, and it's supposed to maintain stability with the currency, with inflation rates. It has very, very few basic tasks that it's supposed to do. That all changed in recent years. So they should have no involvement with the states. If we're to believe that, then there's nobody to bail them out. And that's the concern when you have a state which is heavily indebted and it can't dig itself out. And I do believe the end result of this will be, just as you see it in Greece and other places around the world, that you will have the assets of that particular state being sold off to private individuals, entities, corporations, and so on. I think that's the ultimate goal. I think that's the reason why we often have recessions, because of course they are contrived, they are created intentionally, and you'll see that every time a guy like Warren Buffett is better off. They always accumulate more wealth and power, businesses and shares and assets and everything somehow after a crisis. How does it happen? They get sweetheart deals, they get what you and I can't. Just so happens that that crisis allowed them to seize the opportunity. And I do believe this will happen again on the state level this time, as well as the federal, of course, and the cities. This is the different types of debt. I've shown you similar charts before, whether it's mortgages or credit cards or anything else. You can see that over the years it has increased. And of course, we had some deleveraging somewhat during the financial crisis after that. But of course, it has risen yet again. I do believe that all debt will have to continue to expand just because of the way that this system ultimately works. Looking at this, the household debt rose by 116 billion to, look at this, $13 trillion in the third quarter. That's the highest level in nominal terms, though not when compared to the size of the economy. Well, something that I always like to look at is this: home equity line of credit. It's massive. Massive in Canada. It's massive in the US and other places around the world. It may fall temporarily. It may rise temporarily. You'll see it fluctuate. But ultimately, as I've shown you on that chart, all debt will rise. That's the way it is. One of the points I want to make, and I'll show you more in a moment here, delinquencies, huge problem. It's happening right now with, you can see here, credit card, auto loans. They are having a big problem. What is the issue here? They'll blame it on anything, some sort of disastrous event that took place. They'll blame it on the weather. They'll blame it on the sun coming up later in the day, and who knows? There's all sorts of silly excuses that I see out there. The economy is not doing well. Delinquencies will rise. The reason in Canada why we see less bankruptcies today than we did a few years back is simply the fact that they are using their home equity line of credit to pay off their debt. That is a fact. I've shown you here on this channel before. Look at this. Transition into serious delinquencies, that's 90 plus, by loan type. And you'll see that credit cards claiming, anyway, that after the financial crisis, everything's all good. However, in recent times, this has started to increase. Auto loans as well. I did cover this previously, talking about the fact that a lot of people were not delinquent anymore, and there was reasons for that. I know I've covered it before here on the channel, but essentially what we were looking at is no different than what we saw with people's credit reports. Oh, you have this and that on your credit report? Well, we're no longer going to show that in your credit report, therefore your credit is higher. What a joke. Honestly, what a joke. These reporting systems are terrible. Terrible. And I'll just mention it right now, since I have it in my mind. The PE ratios, you know, we get an average PE ratio of the stock market, right? And you hear it's something like 24, 25. Do you know how they calculate that? If the PE ratio is over a certain level, then they just factor it in at a lower number. It was either 40 or 80. I can't remember at this time. I'll do a video about it. And that completely skews. Why would they ever do that? Why would they ever? Oh, okay. If it's going crazy right now, we're just going to not count it. That's ridiculous. It's as sinful as the inflation rates, the unemployment rates, all of the different statistics that we see out there. Garbage, CPI, everything else. Complete garbage. And the PE ratio is just one of those. Yes, we need to look at it, but it's just one of so many out there. And if we take a whole bunch of them, put them together, we start to get a bigger picture. I don't like to look at any one particular indicator. I always get criticized for some strange reason because I mention a particular indicator, but I assure you, if you've been on this channel for a little while, you'll know I cover hundreds and hundreds of different indicators, and I believe they are all to some degree important. Americans' debt level rose during the third quarter, driven by an increase in mortgage loans. Total U.S. household debt was $13 trillion in the 3 months to September, and it goes into the proportion of the overall debt that was delinquent rose slightly. Okay, 4.9%. Looking at this, I thought it was shocking to me. Anyway, let's get into it. General student loan debt facts. First, let's start with a general picture of the student loan debt landscape the most recent reports indicate. So this is recent information that I found. 1.45 trillion in U.S. student loan debt. That's a huge number, bigger than the credit card debt that exists. 44 million Americans have student loan debt. I didn't think it was this high. I didn't realize 44 million are carrying student loan debt. That's extreme. And then you look at the delinquency rate for student loan. 11%. That's astronomical. Imagine that. 11% of the people are not able to pay within the last 90 days or in default. And you look at this where I've shown you the polls before, they've said they're not going to pay it back. And that's bad. That's really bad. Not because, we've created this system basically to fuel the central bankers. That's why it exists. But what's going to happen to these people as a result of not paying? A lot of people think they can get away with it. I assure you, it's going to bite you in the backside. And I get criticized for that every time as well. The globe's richest 1% own half of the world's wealth. The growing gap in between the super rich and everyone else. And I'm happy that The Guardian used that, the super rich. It's not just the wealthy people living down the street who earns $250,000 a year. It's the super rich, the very richest of the rich. The world's richest people have seen their share of globe's total wealth increase from 42% at the height of the financial crisis to 50% in 2017, or $140 trillion. I've shown you these charts before as well. You can see the fact that they've been able to consolidate power, they've been able to make more money, and you and I are worse off in every category. You look at it in every single category. The average individual, worse off. What else is new? All right. The stock market has one issue right now, and it's scaring a lot of those who do trading, and that's the flattening of the yield curve. The market is nervous about the flattening difference between the 2-year yield and the 10-year Treasury yield. They've been moving closer together, and 70 apparently is that point, 70 basis points, and that's where we're at. They start getting nervous. You can see what's going on in the whole market. Things are acting very strange, especially look at the volatility. I've been showing you that. A flattening curve can signal that the curve will invert, which historically means a recession is on the horizon. But of course, no need to worry, because there's only a 20% chance for a recession next year. I think it's hilarious. Really funny. By the way, in the bottom paragraphs, I talk about how strong everything is. Don't worry, the Fed is going to raise interest rates, and because they know this, because everything is strong, and you know, you're going to have a great time. I've heard enough of their lies, really. When I just think about it, it's really upsetting, honestly, just to see how the propaganda exists. How can you be so ignorant to what's happening, and yet they're allowed to go on these CNBC, whatever it might be. They're allowed to come up here. They're allowed to say things that are wrong over and over and over again. They're allowed to lie to people. And in an instant, everything reverses, just like it did, let's say 10 years ago. And all of a sudden, oh, okay, no, everything's really bad. Everything, I saw it coming. Everybody believes that they saw it coming. When there was only a handful of people, very, very small handful of people that were calling for it. And even after it started getting really bad, a lot of them were saying the recession is over, nothing to worry about, put your money in. Advising people, put your money in, even to institutions that failed. A lot of people lost a lot of money and then lost even more money because they listened to these fools. That's all for this video. If you found it informative, please give me a thumbs up. Now, if you found this video informative, I know you'll find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. There are links in the description below, which will allow you to flip through the pages of these books at Amazon. Take care.